do I make of this quarter from AGCO, one of the world's largest makers of farm equipment? Here's a company that delivered an excellent quarter, big top and bottom line beat, impressive growth in every region, and management raised their full-year forecast pretty substantially. What's not to like, right? Well, I don't know. I mean, the stock did sell off 3% today. After digging through the quarter, I can't see an obvious explanation, except for the fact that maybe South American sales fell a little short of expectations. It doesn't strike me as a huge deal, given that every other region beat the estimates handily. At the same time, AGCO's guidance seems to imply that they'll get hit with some margin contraction. Maybe that's a problem? I don't know. They still have some supply chain bottlenecks. This is tough to figure. Really, I think Wall Street's worried that this will be AGCO's last good quarter as the agricultural cycle finally starts to cool off. Is that right, or could that just be a mistake? Let's take a closer look with Eric Hansotia. He's the chairman and CEO of AGCO to learn more about the quarter and what comes next. Mr. Hansotia, welcome back to Mad Money.
Great to be here, Jim, especially on the best quarter in the history of our company.
Well, that's what I want to talk about, Eric, because I think there are people, when they see a quarter like this, they say, well, it can't get better than that. And yet I think you're setting yourself up for a multi-year move, and that people just want to try to call a top in an industry that frankly has to resist a top because we are a growth world that needs more food.
Exactly. In terms of demand, the world still doesn't have enough grain. You know, and with Russia cutting off the supply in Ukraine, all the indicators show that's going to drive grain prices up another 10 to 15%. It's just put more pressure on our farmers for productivity. They're going to get even more hungry for the technology-rich, productivity-enhancing equipment that we sell to them.
Well, I'm glad you said that, because there was a moment in the conference call where you just basically said, look, Ukraine is a very tough thing to figure out, but it does help profitability for the farmers. And I know we never want to be in a situation where we're trying to profit off of a war, but there is no doubt that this is good news for someone selling farm equipment.
Exactly. When you take supply out of the system, the supply of grain comes out of the system, and the demand doesn't change, price goes up to equalize that. And as price goes up, that's a good thing for our farmers. They get more income into their system. And so that's what we're seeing today. And we're not only seeing it from that situation, but you see it from all of the climate events around the world. We've got such excessive heat in North America and in Europe. Some of the key growing regions for crops around the world are really suffering from all-time record highs. That's not good for crop growth. And so there's a number of factors that create tailwinds for continued good profitability for our farmers.
Well, I've seen your equipment, and you've got giant combines, but you also have some smaller ones. But I associate you with the big guys. You did say that smaller tractors are just not doing as well as the big ones right now. Is that because of some of the things you're talking about?
Well, there's two businesses. One is small ag, one's large ag. On the small ag, we had a very strong business during COVID, and probably even a little bit of pull ahead. Folks like you and I were looking out our window and we're saying, you know what, I've always wanted to take care of that project. I'm going to go buy a tractor now and take care of it. So there's a little bit of extra demand during that time. Now interest rates have gone up, and that small ag segment is a little more susceptible to interest rates. So it's cooled off a little bit, but we knew that was coming. That was very predictable. The large ag, which is in the majority of our business, it is going strong. Demand is strong. There's a lot of tailwinds to that. We keep bringing technology to the marketplace, so it keeps bringing new reasons for farmers that they say, I got to have that machine. It's a great ROI for my business.
Now, I do want to point out, because I get very excited about smart ag, because it makes so much sense, particularly in a world where there's not enough people to work. But it is still not a huge part of your business. What makes you so confident that it can become a growing part of your business that we actually be talking about, say, be 25, 30% instead of what it is now?
Well, it depends what we call smart machines. Okay. Our whole Fendt business is the premium brand that we go to the market for our AGCO customers, for our agro machinery customers. Now, we also have this retrofit business where we sell technology modules onto our machines and every other brand of equipment. So we have those both running in parallel. Both of them are growth engines. Both of them are high margin. Both add a lot of value. And when you combine the two of them, it's a majority of our sales already.
Okay, that's a better way to look at it than that 5 to 6% number that you could, if you're really too stringent about pure ag. Now, do I have to worry about second half margins? There were some comments about it. And I'm bringing these up only because I'm trying to explain to people, your stock went down. Maybe it shouldn't have, but these were the things that people mentioned. So I want to suss them out. Second half margins, real problem?
Well, we beat and raised last quarter. We beat and raised this quarter. I know you and your viewers like that. That's what we like. And so, we've got a plan going forward. We're executing to that plan. There's two factors I would point to. One was last year we had an enormous amount of supply chain issues, just like everybody else in the industrial market. And so when we got to the end of the year, we put a big push on getting that product out to our customers for their tax end planning. Well, that created a big slug of product that went through. This year, supply chain is much better. And so we, by design, made sure that we are building to demand and giving customers a much more predictable outcome. We don't want that slug at the end of the year. So we've got a little bit of a compare issue in December because of that issue. And the second factor is that we're continuing to invest in engineering. All of these machines, we've raised engineering 20% every year since I've been running the company. It's all focused on artificial intelligence and smart machines, onboard compute. We want to keep doing that. Well, according to our plan, we're just going to continue to invest in engineering. There's more engineering spend in the back half than there is in the front half. It's all according to plan. We're delivering on our plan, and it's continuing to add more value for farmers, grow our margins, and grow our top line.
All right, one last question. I was listening to what you say. I've been doing a lot of work with the insurers, and they're all convinced, listen, there really is. The heat wave is not a heat wave. It's global warming, and we've got to start adjusting everything. When I listen to what you just said about the heat, I am beginning to think, you know what? This is not just your normal weather. What does it mean ultimately for the ag business if we really do have definitive global warming that changes the way that we view our world?
Well, it's going to put more challenge on the farmer because there's going to be more weather volatility. In some areas, you're going to have very severe drought, and in a nearby area, you may have a very severe flood. Both are bad for crop production. So it's just going to put more and more pressure on the farmer to be more productive with whatever land that they have. So the use of technology to make the machines more intelligent, to be able to understand variations in the soil or the crop, and be able to make decisions for themselves on behalf of the farmer to optimize yield and minimize the amount of inputs that they're using, because the inputs are expensive, is exactly where this market's going. That's why we're investing so much in it. We see that this is an accelerating trend. Not only supply and demand, but the pressures from the climate are going to continue to make this a bigger deal.
That makes so much sense. Well, you've cleared up everything that I have, because I've been a backer since the 30s, for you know that, for your stock. So I don't want to see, if there's chinks, I don't want to avoid them. I want to challenge them head on. That's Eric Hansotia. He's the president and chairman, CEO of AGCO. Eric, thank you for coming back on the show.
Great to see you, Jim.
Yeah, stand by to be back after the break.
Coming up, Cramer wants to hear from you. Your calls on the Thunderous Lightning Round. Next.